4 hours on mandatory topic. Today is one such mandatory topic, a code of ethics. So members are requested to get benefit out of it. The Institute of Chartered Accountants of India has established a code of ethics for its members to uphold the professional standards and maintain public confidence in the accounting profession. The ICAI Code of Ethics is based on the fundamental principles of integrity, objectivity, professional competence and due care, confidentiality, professional behavior, independence and professional development. The ICAI Code of Ethics sets the ethical standards for chartered accountants and provides guidance on professional conduct. Adherence to these code of conduct is essential to maintain the integrity and reputation of the accounting profession and to serve the best interest of clients and the general public, as chartered accountants are the partners in nation building. To give more insight into this code of ethics and ethical standards, we have with us today J. Venkateshwarlu, former Central Council member, ICAI from Hyderabad. On behalf of Office of SIRC and Chairman, we welcome you, sir. We have also with us today SIRC Chairman CA Pannaraj Sirigeri. We welcome you, sir, on behalf of Office of SIRC. Without much delay, we will start today's proceedings with the invocation of ICAI motto song.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. May I now request CA Pannaraj Sirigeri, Chairman SIRC of ICAI, to deliver his welcome address.
Good evening, members and the esteemed speaker for the day, J. Venkateshwarlu sir. Today we have Code of Ethics and Ethical Standards webinar, and I am very happy that an erudite personality and who has represented both Regional Council and Central Council for almost nearly 2 decades as our representative, and has seen the process of disciplinary proceedings with a closed and microscopic eye in the nearest vicinity of his office responsibilities. So I am thrilled to be part of this. Venkateshwarlu sir, a very warm welcome to you for this
thank you.
webinar, and thank you for accepting to be here. And you are a man who is a great source of energy for many people like me, both at the council, regional council, and also at the central council. And your contribution towards the members and students is lauded, and we are all enriched by your guidance also. So a very warm welcome to you, sir.
Thank you. Thanks for giving me this opportunity, Chairman.
Yes, and we are very blessed to have you. And I have heard you speaking on this during the COVID times also. And thank you for that. And I also welcome all the members who are here to listen to the experienced Venkateshwarlu sir. And it is very, very important in these times. As you are seeing, so many changes are happening in both statutorily and professionally and technologically, and the challenges are on the increase day by day for those who are in practice. So the of conduct and ethical standards are another area where we are bound to be working within the framework of, and I have been seeing many disciplinary cases for not following the code of conduct and ethical standards. Recently, there was a hearing of disciplinary committee at Chennai SIRC office also. There are almost 30 to 35 members who are here to attend the disciplinary proceedings. For small mistakes, they have been facing such things. So with his vast experience, Venkateshwarlu sir will be taking you through the new code of ethics and also professional conduct, ethical standards that are to be followed and which are very, very vital for you. And I'll take one more minute to appraise you about the initiatives of at SIRC. We at SIRC have decided to upskill the members across South who are in practice, especially with the technological new technology, so that the advanced technology not only helps you in performing the professional works with high quality, but also with high speed. So this is what is the need of the hour, number one. And the automation is taking over most of our professional, traditional professional areas. So we have been trying to expand ourselves to the new areas especially through MSME sector. So these are the two main agenda with which we have been trying to work from SIRC. So today only we have taken a decision to upskill the members through the branch, what's called members who will be trained at SIRC level for technological upgradation, and they will in turn be there with you at branch level to teach you or to explain you with hands-on experience in the systems how to utilize technology for better performance in the professional work. And at the same time, next month, that is June 27th, is the International MSME Day. So to commemorate that, we want to do a program across South through the branches, how to widen the practice areas, expand the practice areas through various opportunities through MSMEs, somewhere around the 27th or 28th of June. So I request all of you to make use of these opportunities and also guide us and give us the feedback how to improve upon the various initiatives that we have taken here. And with these words of opening remarks, I very warmly welcome you all, and I wish you all a very happy learning through this session of Code of Ethics and Ethical Standards. Once again, I welcome you all very warmly and hand over the proceedings back to the organizers. Thank you very much. Thank you, sir.
Thank you, Chairman.
Thank you, Chairman, sir. You have set a good start for our today's program through your welcome address. It's my privilege to introduce J. Venkateshwarlu, sir, a person of a great gesture and attitude. CA J. Venkateshwarlu is a commerce graduate from Andhra University. He is a fellow member of our institute. In the profession of chartered accountancy, he has been rendering various professional service for about 40 years. A big round of applause for that. He is currently partner of Mrs. JB SL and Associates, Chartered Accountants with the head office at Hyderabad and branches at Chennai and Visakhapatnam. Venkateshwarlu sir served as an elected member of Southern India Regional Council, SIRC of ICAI, for 3 terms from 1998 to 2007. During this period, he has held various positions like a secretary, vice chairman, and the first person of a Southern Region chairman also. He served as an elected member of Central Council as well from Southern Region for 3 successive terms from 2007 to 2016. He was a member of Appellate Authority under the Chartered Accountants Act 1949. He was the member of Appellate Authority constituted under the Chartered Accountancy Act 1949, appointed by the central government from 2019 to 2022. With this brief, I present before you CA J. Venkateshwarlu Garu to handle today's session on Code of Ethics and Ethical Standards. So over to you, sir.
Thank you. Thank you, Rahman, for the nice introduction and the very brief introduction. I must first thank you for keeping it very brief for less than 2 minutes. And chairperson of the SIRC, Sri Pannaraj, my good friend, and various other members and office bearers who are there online. And it is a very pleasant good evening to each one of you. And it's my privilege that I was given an opportunity to share some of my thoughts on this very important topic of code of ethics, which is like, our Bible or Bhagavad Gita for the CA professionals, because anytime we are expected to keep full compliance with our code of ethics before we even go to accounting standards, auditing standards, and other legal things. This is our own code of ethics, which needs to be complied by all the members. And I'm happy that SIRC has been conducting this program almost every year, at least once, and most of the branches are also conducting, because we have now realized the need of updating ourselves on the code of ethics. In fact, the institute also has been taking a lot of initiatives on regularly updating and bringing out various notifications for this on this code of ethics, because we are now compatible with the International Ethical Standards Board's code of ethics, and almost barring a few these things which we will deal in the subject. So, and for me, it is again coming back to the home, like my SIRC days when I was there for 9 years, particularly the chairman's year. I fondly recall my memory lane and be happy that as if I'm sitting back in the SIRC premises. In fact, I was asked to come physically, but then I thought it may be better if we can have an online program so that many members can view sitting at their homes in this hot summer. So this was my suggestion, and thanks to the SIRC management for accepting me to this request. And we'll start. I have kept it nearly for 2.5 hours. And those who have any questions, they can put it in the question box. I'll try to address them at the end of the session. And though there are about 100 slides, don't worry, because some of them are there mainly to keep the continuity in the volumes. Some of them are more of informative slides. So I'll try to take minimum time for each of these slides. And let me start the session with my sharing the screen. And Mr. Rahman, I hope you will be there available in case of any.
Yeah. Our technical team and myself will be available throughout your session, sir.
Yeah. So keep me alerted in case if it is not visible or.
Yeah, sure, sir.
Yeah. Thank you. So now let's start the session with why the code of ethics at all, first of all. Full screen. Yeah. Why code of ethics? It's essential for commanding the respect and confidence of the regulators and public at large. Because unless we have a proper code of ethics, we will not be able to command the respect and confidence of the regulators. And the conduct of our members is, you are all aware, that regulated through the Chartered Accountants Act 1949 and the regulations framed thereunder. And what is all about this code? Why is it called a code of ethics? It is essentially a set of professional ethical principles and standards regulating the relationship of CAs with clients, employers, employees, fellow members of the group, and the general public. Because this is nothing but a set of principles and ethical principles and standards which regulates our relationship with various stakeholders in the society. And what is the origin of this code of ethics? ICAI published the first code of ethics for the first time in 1963, mainly comprising of some commentary on the clauses of first and second schedules existing in those days to the CA Act 1949 and some ethical principles. So that code has been revised 12 times so far, and the latest, that is 12th edition, came in 2019-20. And the 11th edition, which was approved when I was in the council during 2009, was for the first time aligned with the IESBA code, that is International Ethical Standards Board Code of Ethics, which was published in 2005. And that time it was divided into two parts, Part A and Part B. Part A was comprising of the provisions of IESBA Code 2005, and which was slightly modified to suit to our country's conditions. And part B was our own laws such as CA Act, CA regulations, consultations, and company law, etc. This is all about 2009 code, which was the 11th edition. And now the 12th edition is, that is 2009. There have been so many changes in our law, as we are all seeing. CA Act has been amended many times, and regulations have been amended, modifications to the council guidelines. Accounting and auditing standards have undergone a major change, like Ind AS coming into force. New Companies Act itself has undergone a complete new change from 1956. We got the new Act in 2013 Act. And to make this code aligned with all these International Ethical Standards Board, they have revised also their code in 2018 to make our code aligned with that IASBS code, and also with the various laws that have undergone change in the country. We have brought out this, the Institute has brought out this Code of Ethics revised edition in 2019-20. And the current code is significantly large by imposing several new restrictions, in particularly for public interest entities, taxation services to audit clients, assessments for threat to independence, NOCLAR, that is non-compliance with laws and regulations, etc. This is a more or less a big change when you compare with the earlier code. Some of the important things are of the new code are they responding to non-compliance or laws and regulations which became applicable from 1/10/2022 because of COVID. This provision was postponed and it was brought into force from 1st October 2022. Most of you must be aware. And disclosure is now required for 2 consecutive years if the gross annual professional fee from an audit client represent more than 40% of the total fee of the firm. And if it is for public sector, public interest entities, it is only 20%. For others, it is 40%. If 40% of your fee is coming from a single client, you need to now report to the institute. Earlier, when the code was introduced, it was to be reported not to the regulators, but now it is to be informed to the institute. The form, etc., for this will be prescribed, or I do not know in the recently if the form has been notified. It was to be notified. And exemption for audit of government companies, etc., from this, where appointments are made by the government, from this 40% or 20% ceiling. And further restrictions on providing taxation and management services to the audit clients. We will deal with it when we go for further. This is also brought into effect from 1/10/2022. And independence requirements for audit and review engagements and other assurance engagements have been differentiated, which also we will see it. Duty of accountants in case of unintentional breach of independence standards, that is the accountants are duty bound to address the situation when there is an unintentional breach of the independence standards. Increased clarity of responsibility for compliance, firms, network firms, individuals within firms, etc. The clarity has been given more. And use of the word professional accountant for the first time. Earlier, they used to use member or chartered accountant, but now they have started using the professional accountant. So you will find in the subsequent slides the words, the letters PA, which stand for professional accountant. Some of the new concepts which were introduced in the new code is that the key audit partner, which is nothing but engagement partner or whatever we call signing partner, etc., who is responsible for engagement quality control review and other audit partners, if any, on the engagement team who make key decisions or judgments, etc. So it is nothing but the word key audit partner has been brought in, which is, in our terminology, it is engagement partner, or we call signing partner also. There is a new concept called public interest entity, which has been defined in the code as a listed entity or an entity defined by a regulation or a legislation as a public interest entity, or for which the audit is required by regulation or legislation to be conducted in compliance with the same independence requirements. This is more or less like, all listed entities will be public interest entities, and all entities which are, coming under regulation or legislation also will be covered under this. And for the purpose of this definition, the banks and insurance companies are considered to be public interest entities because by the very nature of their, public bodies. So they are also covered. So the word banks only are used. So therefore, even a private bank will be called as public interest entity under this code. So other entities might also be considered by the firms to be the public interest entities. That is, the chartered accountant firms can recognize if there is a public interest entity falling within this definition. Then the word professional accountant also again used as a in place of the chartered accountant, who is also a member of the Institute of Chartered Accountants of India. And in part 1 of the volume 1, as we go forward, we'll see the term professional accountant refers to individual professional accountants in service and to professional accountants in public practice and their firms. And in part 2 of volume 1, the term professional accountant refers to professional accountants in service. And in parts 3, 4A and 4B of this volume, the term professional accountant refers to professional accountants in practice and their firms also. So don't get carried away with the word professional accountant, which includes the firms also. So this code of ethics is divided into 3 volumes. Volume 1, which talks of the principles based on IEBSBA's code 2018. Volume 2 covers domestic provisions governing the members, that is Companies Act, accounting standards, auditing standards, our own Schedule 1 and Schedule 2 of CA Act. And volume 3 is purely the disciplinary cases decided so far by ICAI. So all these 3 volumes are there. I will be covering the volume 1 and volume 2 because volume 3 is nothing but case laws. So I'm not touching on this volume 3. So I'll cover volume 1 and 2. So now let us look at volume 1. Which talks of more of our independence, the principles, the conceptual framework, and the principles to be followed by members in service, principles to be followed by members in practice, and the independence for audit and review engagements, and independence for assurance engagements. This is again, this volume is divided into 5 parts. The volume part 1 talks of fundamental principles and the framework for the code of ethics, and part 2 talks of the principles to be followed by the accountants in service, and part 3 talks of additional material principles for public practitioners, and independence for audit and review engagement, and independence for assurance engagements other than audit and review engagements. In fact, part 4A and 4B more or less similar, but they have segregated one for audit and review engagements and the other one for assurance and engagements and other review engagements. So when we come to part 1, which talks of complying with the code, fundamental principles and conceptual framework, we have to understand that every accountant, every chartered accountant shall comply with the code. This is a mandatory, like our mandatory auditing and accounting standards. The code is mandatory for all the members. And if situation demands, one should look at other laws too. That is, if there is some requirement to look at the other law, one has to look at the other law while complying with the code. And every PA shall comply with each of the following fundamental principles. That is, they are called FPs in the international language. That is fundamental principles. These are the 5 fundamental principles which Mr. Rahman also mentioned. That is integrity. That is, we have to be straightforward and honest in all our professional and business relationships. The objectivity is the second principle, which is not to compromise professional or business judgments because of bias, conflict of interest, or undue influence of others. And the third fundamental principle is professional competence and due care. That is, we need to attain and maintain the professional knowledge and skills all the times whenever you are there as a chartered accountant. And we should be acting diligently in accordance with the technical and professional standards also. And the fourth fundamental principle is confidentiality. That is, we need to respect the confidentiality of information that you acquire in the course of your professional business relationship. And the fifth one is the professional behavior. That is, to comply with the relevant laws and avoid any conduct that might discredit the profession. So these are the 5 fundamental principles which we need to remember always and duly comply in the course of our acting as a chartered accountant, whether be it in service or be it in practice. A professional accountant who identifies a breach of code shall evaluate the significance of the breach and its impact on his ability to comply with the fundamental principles. That is, if whenever you identify a breach of the code that you are not able to comply with the code, you should evaluate the significance of such breach and its impact on his ability to comply with the fundamental principles. That is, if you are not able to comply with the code as it is, then you should immediately look at these 5 fundamental principles, which principle you are not able to comply. And the framework of the code says that circumstances in which a PA operates might create threats to compliance with one or more fundamental principles. That is, during the course of your working, you may come across certain threats to comply with the fundamental principles, which we will come across, we will list out in the next slide. And a professional accountant shall comply with the conceptual framework to identify, evaluate, and address the threats. That is, this our conceptual framework gives you the scope for identifying, evaluating, and addressing the threats to compliance with the fundamental principles. The conceptual framework specifies an approach for a PA for compliance with the fundamental principles, because our framework gives an approach for the accountant for complying with the fundamental principles. When you are applying the conceptual framework, the accountant should exercise professional judgment and remain alert for new information and to the changes in facts and circumstances, and use the reasonable and informed third-party test. That is, when we are going through this conceptual framework, we should always remember these 3 things, that is professional judgment and remaining alert and reasonable and informed third-party test. And then we move on to identification of threats. That is, the members should identify the threats to complying with the fundamental principles. These threats can be, again, are categorized into 5 threats. One is a self-interest threat, where the threat that a financial or other interest will inappropriately influence the member's judgment or behavior. That is, if you are getting interested in a particular thing, financial or other interest, that will influence your judgment and also behavior. So that is a kind of a threat. The self-review threat is a threat where a professional accountant will not appropriately evaluate the results of a previous judgment made. That is, if you are not appropriately reviewing the results of earlier judgments, then that threat is noted as self-review threat. The advocacy threat. This threat is a threat that a PA will promote a client employer's position to the point that his objectivity is compromised. That is, whenever you are compromising with your independence and other things, or to protect the client or employer, then this threat will be visible. The familiarity threat. This is another threat that, due to a long, close relationship with a client employer, a professional accountant will be too sympathetic to their interests. That is, if you are associated with a client for a long time, sometimes you may be a little sympathetic to some of the issues and ignore those issues. All those issues will are grouped as a familiarity threat. Intimidation threat is a threat that a PA will be deterred from acting objectively because of actual or perceived pressures, undue influences. That is, whenever you are put under undue influence or pressure, all those things will be seen as a intimidation threats. So a circumstance might create more than one threat. That is, in a particular situation, it may create more than one threat, and a threat might affect compliance with more than one fundamental principles. That is, one threat may, for example, familiarity threat may affect your independence, your integrity, all those things. So same way, more than one threat also, and a threat might affect more than one fundamental principle. So we need to be very careful about addressing these threats. So how do we evaluate the threats? So while evaluating the threats, a PA should look at whether a threat is at all an acceptable level at all or not. Because first of all, we need to evaluate the threats. So while evaluating the threats, consider all the facts relevant in evaluating the level of threats: leadership with ethical behavior, systems of corporate oversight, consideration of new information or changes, facts and circumstances. If new information results in identification of a new threat, it has to be addressed. Suppose while you are understanding and considering the factors, you come across a new information which may become another threat. So all those things have to be evaluated properly. And how do we address these threats? We should address the identified threats by eliminating or reducing them to an acceptable level, because we have to bring them to an acceptable level. Then only we can continue with the assignment. So eliminating the circumstances, including interest relationship that are creating the threats. This is one first step. That is, whenever you come across a threat, you should eliminate the circumstances and interests or relationship which are creating such threats, and then applying the safeguards to reduce the threats to an acceptable level. That is, you create safeguards to reduce the threats. And third is, suppose if you, despite eliminating the circumstances and despite applying the safeguards, if you can't reduce the threats, then you should decline or end the specific professional activity. This is how we need to address the threats. Then what are the various considerations for audits, reviews, and other assurance engagements are? That is, independence of our professional accountants. We need to have independence, and we should follow the independence of the standards sincerely. And we should always keep the skepticism, professional skepticism. That is, you should always have a professional skepticism in mind while approaching the audit and audit issues. That is more of a conservative approach. And finally, the compliance with the fundamental principles. So you should always comply with all the 5 fundamental principles that we have listed in the beginning. So the part 2 of the volume 1 talks of applicability of these members in service. So these are the basic things that a member in service has to always keep in mind while working in a particular organization. That is, applying the conceptual framework we need to apply. If a professional accountant may find threats to compliance with the fundamental principles in the following areas. These are the areas which generally our members may find threats to the compliance with the fundamental principles. That is, the first one is conflict of interest. Whatever I have mentioned in the bracket sections, these are the sections referred to in the Code of Ethics Volume 1, which when you go back to read it, you can keep that as a reference. That is why I've kept the section number also. You find a lot of reading material in this volume, so it's always suggested that you should read the thing, because I have only captured some bullet points here. Please go back and read it when you find time. The first situation is a conflict of interest. That is, the member should not allow a conflict of interest to compromise professional or business judgment. That is, when you are working with a company or a corporate or any other entity, you should not have any conflict of interest with that entity or with the promoters or whatever it is. And preparation and presentation of information. That is, we need to follow the relevant reporting framework. We should present in a manner not to mislead or influence, and we should exercise a professional judgment and not to omit anything intentionally. That is, whenever you are preparing and presenting information, when you are in service of a company or a corporate, you need to follow all these scrupulously, so that there will be no exaggeration or there will be no hiding of information, etc. The third area is acting with a sufficient expertise. You are also expected to display your expertise, and you should not mislead anybody as to the level of expertise experience possessed. And financial interest, compensation, incentives linked to financial reporting and decision making. The member should not have any manipulation of information or use a confidential information for personal gain or financial gain of others. Of course, in all the listed entities, there is the insider trading rules imposed by SEBI, and all the employees also at a particular level will be governed by those things. And in other areas also, one should not use or have any financial interest in the company in which he is working. Then inducements, including gifts and hospitality. That is, he should neither offer nor accept any inducement with any intent to improperly influence the behavior of the recipient. That is, the member who is working for an entity should not offer or should accept any such kind of gifts and inducements. Even immediate or close family members are also governed. So the members, family members are also governed by this particular thing. Then responding to NOCLAR, we deal it in separately. This is again, the member in service has to follow this new regulation. And the pressure to breach the fundamental principles, that is, he should not allow any pressure from others which will result in a breach of a compliance with any of the fundamental principles, and shall not place pressure on others also to result in the other individuals breaching the fundamental principles. That is, he should not accept any pressure which will lead to breach his fundamental principles, and he should also not apply the same pressure on others which will lead to breaching of the fundamental principles by the other persons. This NOCLAR, which has been introduced for the first time in this code of ethics, is nothing but non-compliance with laws and applicable regulations. That is, even though this is brought in as a conceptual, as a new concept, but even earlier also it was indirectly available to us as to whenever there is a non-compliance by the entity in complying with the applicable rules or legal requirements, the member is expected to raise the matter to the next level or escalate the matter or report it to whomever it is concerned. So this is applicable from 1/10/2022, and particularly for the members who are in service, this is only applicable to the senior professional accountants, that is senior members in service being employees of listed entities. For the time being, this particular requirement is not applicable to all entities, but applicable only to the listed entities. So the senior professional accountant means here KMP, or even if he is not a KMP, but if he is in a very senior position, it is always advisable to look at this requirement and comply with that. And for members in practice, this regulation is applicable to audit engagements. Please note that this is applicable only to audit engagements of entities having net worth of 250 crore or more and where shares are listed. This is a combined condition. That is, first of all, it is applicable to only audit engagements and which have a net worth of 250 crore or more and where the shares are listed. So which means this is not applicable for unlisted companies. That is, audit engagement means a reasonable assurance engagement in which a member expresses an opinion whether the financial statements give a true and fair view in accordance with the applicable financial reporting framework. So auditing, it is applicable to audit engagements only and entities having a net worth of 250 crore or more or where shares are listed. And these laws and regulations that have an access to the professional accountants, professional training and expertise. That is, laws and regulations that have a direct effect on the determination of material amounts and disclosures in the financial statements, and other laws and regulations which compliance with which may be fundamental to the entity's business and operations or to avoid material penalties. That is, whenever we are looking at this regulation, we need to look at which law has not been complied and what is the impact of that law on the financial statements. Suppose if some small law is not complied, which has no significance on the financial statements, then it need not be reported. But definitely, whatever is likely to have impact on the financial statements, it has to be looked at carefully and reported. Examples of laws and regulations required to be addressed by the members are fraud, corruption and bribery, money laundering, terrorist financing, and all these things. There's an example given, but this does not limit us from reporting any other law which is applicable and directly have an impact on the financial statements as well as functioning of the company. And other salient features of this regulation is that following matters are not in the scope of NOCLAR. That is, one matters clearly inconsequential. That is a very small thing. Though they have not used the word material, here it is used inconsequential. So which have no consequence on the company's working or the financial statements. It need not be reported under this regulation. And personal misconduct unrelated to the business activities of the client or employer. Suppose if some management executive or MD or someone has a personal misconduct, maybe a bigamy or something else, then we need not report on such matters. And the non-compliance with other than by the client or employee or those charged with the governance, management or other individuals working for or under the direction of the client or employer. That is, at a very low level, if there is some non-compliances, etc., we need not look into that. But of course, you need to see whether it has any impact on the working of the company. If there is no impact, but there is a small bribery or something happened at the lowest level, you can ignore that. So here the professional accountants are required to address NOCLAR only when and if he encounters the same in the course of providing a professional service. That is, when you are providing a professional service, if you encounter or come across non-compliance only, you need to report. After completion of your audit and issuing the report, if you come across a non-compliance, then you are not required to report. But even it may result into a kind of a negligence, which is chargeable under some other this thing. But as far as reporting or raising the matter to the higher ups is that it has to be identified during the course of your rendering the professional service. The appropriate authority for the purpose of disclosure will depend on the nature of the matter. Suppose to whom you need to report a non-compliance is, for example, the appropriate authority would be SEBI in the case of fraudulent financial reporting in the listed companies. So now, since we are concerned with the listed companies, the institute has given an example that any such non-compliance should be reported to the SEBI. It could be to the ROC, or it could be to the other regulating department, etc. Like if it is an insurance, maybe IRDAI. If it is a banks, maybe Reserve Bank. So on and so forth. So we need to report to the respective regulatory authority. And as I said, this provision has been brought into force with effect from 1/10/2022. Though it is there in the statute book for the last 2 years, but it has been notified only from 1/10/2022 because of COVID. So this requirement to report under this clause would come only from the last October. Then the part 3 of this volume talks of applicability to members in public practice, that is for all the practicing chartered accountants. Again, we have to apply the concept of the framework. We have to continue to comply with all the fundamental principles like the members in industry. And one may find the potential threats to comply with the fundamental principles in the following areas. That is, again, conflict of interest. That is, a practicing member should not allow a conflict of interest to compromise professional business judgment. To consider the conflicts of interest of network firms too, because now we all have formal networking also. So even a network firm should not have any conflict of interest while accepting the audit or other professional assignments. And the professional appointments, again, we have the KYC norms of ICAI mandatory for all attest functions. That is, whenever we are accepting an assignment for attest function, we need to look at the compliance of the KYC norms of the client. That is, know your client and comply with that. This is available on the site of the institute. It was issued way back in January 2017. And to communicate with the previous professional accountant, that is the previous auditor, whenever there is a change and you are entering for the first time in a client's place, and to respond to the proposed new PA. Suppose if you are the outgoing auditor, you are expected to respond to the incoming auditor's request for NOC or any other information about the client, and to periodically review whether to continue with the engagement or not. That is, suppose if you are continuing with an audit assignment for 5 years and so on, and you need to periodically review whether there is any new information which would create a threat for your continuance or your independence. So you need to regularly keep reviewing the continuation of assignment or not. And then second opinions, that is providing a second opinion. Suppose if a client approached you, a new client approached you for a second opinion on an entity who is not your client, but might create a self-interest or other threat to compliance with the fundamental principles. So you need to be careful. So if client is not permitting to communicate with the existing or predecessor, you need to determine whether to accept such assignment or not. That is, the code suggests that whenever you get a professional opportunity in the form of providing a second opinion, and if the client is not allowing you to talk to the existing or the person who has given the first opinion, you have to decide whether it should be accepted or not, because sometimes he might be misleading you, so therefore giving you only one set of facts. So it is always suggested that it should not lead to non-compliance with the fundamental principles. Fees and other types of remuneration, again, you need to look at the level of fees, contingency of fees. There are exceptions, there are referral fees or commissions. All those things you should consider while accepting the appointment. Otherwise, at a later date, you may be in trouble to continue the assignment and complete it. Inducements, including gifts and hospitality, that is, we are expected to be not accepting any gifts or hospitality. They are all prohibited by laws and regulations. And there are certain things which are not prohibited, but they might create threats to compliance with FPs, because even not prohibited areas, one should look at carefully whether they are creating any threat to your complying with the fundamental principles. Inducements to immediate or close family members also is prohibited. That is, you should not allow your immediate family members to accept gifts from your clients. Custody of client assets, that is holding of client assets, creates a self-interest or other threat for complying with the fundamental principles of professional behavior and objectivity. Therefore, we should not hold anytime assets of the client like cars or two-wheelers, etc. Sometimes cell phones, etc. We should not give any scope for non-compliance with the fundamental principles by holding this kind of assets of the clients. Responding to no clerk, that is even practicing members, if they come across any non-compliance with the regulations by the applicable law, by the regulations by the client, that is entities with net worth of 250 crore and listed companies, you need to report all the rules what is applicable for the members in service are also applicable here. So you are expected to raise them to the higher ups. Then part 4A of the volume talks of the independence for audit and review engagements. That is our independence whenever you are doing the audit and review engagements. This is our professional independence should be felt, experienced, and be visible. Is not only you practice, but you should make it visible that you are independent for accepting the assignment, however that tough it may be. And this is the hallmark of our profession, and this is what will bring in our public trust. Unless you are fully independent of the client, the public trust will not be there. So therefore, you need to always keep your independence ahead of everything. So what is the applying the conceptual framework is that is we should be independent while performing the audit review engagements, and that should be in accordance with the requirements of this code, our audit engagement, CA Act, regulations, Council guidelines, Companies Act, all these applicable guidelines of RBI, SEBI, etc. We need to fully comply with these things, and we should be independent while performing the audit. Independence requirements as set out in 141(3) of the Companies Act, that is ineligibility or disqualification of auditors as specified in 141(3) have to be fully read and understood, and one should not allow anything to non-comply. Then public interest entities, this is a newly introduced concept as we discussed. We should look carefully what is applicable for public interest entities and under the code. And period during which the independence is required to be maintained. That is, independence has to be always maintained during the course of audit as well as post-audit also, because we come across certain situations where if you are the auditor of a company, you should not get into the board within 2 years of completion of that assignment. Same way, if you are a director of the company, you should not accept the audit immediately of that company. And communication with those charged with the governance, we should always keep communicating with those charged with the governance. Network of firms, documentation, breach of independence provision, all these things have to be kept in mind when you are doing the audit and review engagements, and display your independence in all these areas. Independence for audit and review engagements, we are continuing. The fees is very important area which you need to keep in mind. That is one, that is the fee should be commensurate with the work and size, because certain times we come across fees will be very low even for a listed companies. I have come across some situations where the fee was very low, and later on the member was feeling that the work is too much, and so you should well in advance decide what should be the fee commensurate with the work and the risk involved also. Disclosure is required. This is a new concept. The disclosure is required for 2 consecutive years the gross annual professional fee from a non-public interest entity client and its related entities represent more than 40% of the total fee. If it is a PIE, that is public interest entity, 20%. That is, whenever you are getting your fee, total fee, fee from a particular client for audit requirements is 40% of your total fee, then the disclosure has to be made to the institute. Originally, when this provision was brought in, it was to the regulators, but now it is to the institute, and the format of disclosure will be released soon. I hope by now it is released. I did not check up recently. And this provision is exempt where total fee received by the firm does not exceed 20 lakhs. That is, this is also a small relaxation for smaller firms. That is, if their gross fee is 20 lakhs per annum, then they need not report these things. Even if fee from one client is more than 40% of the total fees. That is, fee overdue remain unpaid. You should also look at the unpaid fee. If it is continuing for a long time, then you need to evaluate whether you should accept that, continue to render service to that client or not. And this might create a self-interest or intimidation threat. Contingent fee exceptions. There are certain exceptions for the fee which will be decided on contingency, but otherwise we should not accept any assignment based on happening of certain things or achievement of certain results. So all these things have to be kept in mind while accepting an assignment and keeping your independence. Compensation and evaluation policies. That is, a firm shall not evaluate or compensate a KAP based on the partner's success in selling a non-assurance services. That is, in some cases, I don't say in all cases, but maybe in some big firms, there may be some targets fixed for the professionals, partners or professionals to achieve certain quantum of work or a value of the service. So that should not be the case. The policy of the firm in this regard should not create a self-interest threat. That is, if a particular partner is having a target of achieving a particular amount in a year, then it will definitely create a threat for himself in the long run, and he has to comply, compromise with some of the fundamental principles. So that should not be allowed to remain in the firm's policies. Then gifts and hospitality. And acceptance of gifts and hospitalities might create a self-interest or familiarity or intimidation threats. Therefore, we should not allow such situations to happen. And actual or threatened litigation, that is, when a litigation with an audit client occurs, then self-interest and intimidation threats may be created, because we come across some cases where the auditor and the client got into some litigation over some property acquisitions, or even including at the fee litigations, etc. So you should time to time ensure that no litigations are there with the clients. And the financial interest, holding of a financial interest in an audit client might create a self-interest threat. Now and then we come across some financial interest by the chartered accountant with his client, like investing, taking some share in the client's capital, etc. That should not be there. Even your immediate family members also should not be allowed to invest, and which will put you to this self-interest threat and compromising with some of the fundamental principles. Applicable to interest held by firm, network firm, and audit team members, because this financial interest is applicable to all the entire firm as it is, and the network firm, and also audit team members. And loans and guarantees, that is, we should not give or be a part of giving guarantees or loans to any clients, or guarantees, deposits, all those things. And we should not have any business relationship. A close business relationship might create a self-interest or intimidation threat. And we should not have a family and personal relationship. That is, after when you become a relative to the client, then you should either quit or address the threats that may come up. Because suppose if the member is closely related to the client, then all kinds of threats might develop. So therefore, we should avoid that situation. Not that you should forego the relationship, but you should either address that or get out of the assignment. Then the recent service with an audit client, that is, if an audit team member has recently served as a director or officer, then it might create a self-interest or familiarity or intimidation threat. Therefore, there is a time gap imposed by SEBI on this. That is, if I'm right, 2 years is the time gap that the auditor has to maintain to join the company as a director again. So serving as a director or an officer of audit client, that is a partner employee of the firm network, shall not serve as a director or officer audit client of the firm. It might create a self-interest. Vice versa, this is either before you are joining the company or before joining the firm, you should not have any association with that client in the immediate past. Employment with an audit client, that is, employment relationship with an audit client might create a self-interest, familiarity, or intimidation that here and there we come across some of the members while doing audit also, they also undertake some kind of a retainership, etc., which are all not to be done. because that would create some these familiarity and intimidation threats, and temporary personal assignments. That is, at times we may be approached for loaning our personnel to meet the emergency requirements of bookkeeping, etc., of the client, or sometimes we send 1 or 2 people to help the client to complete the pendency of the works. These such arrangements might create a self-review, advocacy, or familiarity threats. So we should avoid them, or sufficiently take care that these threats are not coming out in a big way, which would impact your fundamental principles. And then long association of personnel with an audit client. The institute has given us the guidance that is in the audit of a public sector, public interest entity, a chartered accountant shall not act as engagement partner or engagement quality control reviewer or a key audit partner, or in any combination of these 3 roles for more than 7 years. Of course, we have under the Companies Act the retirement by rotation for 5 years itself. And in some of the companies, they also impose a condition that a particular person should not be there as an engagement partner for beyond 3 years or 5 years, something like that. But otherwise, these are the cooling off periods prescribed in the code. That is, engagement partner for 7 cumulative years, then he should stay away from that assignment for 5 consecutive years. And if it is an EQCR for 7 years, then he should keep away for 3 years again with that assignment. And key audit partner also, if you are there for 7 years, then you should stay away for 2 years. Key audit partner and engagement partner for 4 years or more, cooling period of 5 consecutive years should be maintained. So the restrictions on the activities during the cooling off period, that is, when you are in a cooling period with a particular client, you should not engage again as a consultant with the engagement team or a technical or other industry, the client. And prohibition on leading or coordinating the professional services provided by the firm. That is, you should not associate with that audit client at all, in one word, if I have to say. So therefore, you need to be careful while you are associated with a particular client for a long time. Particularly for the smaller companies where there is no requirement to retire by rotation, one should be careful in complying with these provisions. And then there are auditor retirement rotation requirements, which are stipulated under various acts like 139(2) of the Companies Act. I'm not going deep into these issues because RBI, SEBI, all of them have imposed certain restrictions for the private sector banks, foreign banks, insurance companies, etc. All these things have to be strictly followed. And then provision of non-assurance services to an audit client. Actually, our Companies Act Section 144 prohibits the statutory auditor from providing specified services which are listed there. It actually almost prohibits providing all kinds of services, you can, in one word. But there are other areas also which one needs to keep in mind, because they are all elaborated in the Code of Ethics, that is accounting and bookkeeping service. If you are doing audit, you should not get into these areas. If you are doing administrative services, again, you should not do administrative services. But however, word processing or preparation of statutory forms, etc., can be done, which generally are called administrative services, which doesn't, get into the impact on the financial areas. Then valuation services, again, it might create a self-review or advocacy threat. That is, a professional accountant shall not provide this service to a PIE if it is likely to have a material effect on FS in which the firm will express an opinion. That is, when you are issuing a valuation service or rendering a valuation service, you will be privy to certain information which may have some impact on the financial statements. Therefore, it is suggested that you should not get into this valuation service, particularly to a public interest entity. And for a non-PIE also, if it is likely to have a material effect on the financial statements, you should not accept these service. Then taxation services to audit clients. This again, some more limitations have been brought in the new code. That is, you are allowed to prepare the tax return, tax calculations, planning and advisory services, etc. So long as they don't come in your way of preparing independence in your financial statements. The firm shall not provide tax services that involve assisting in the resolution of tax disputes. That is, in the case of, suppose you are also rendering a service in relation to an appeal, so you will be privy to certain information whether the company will get the favorable or unfavorable order, which would have some impact on your independence while finalizing the financial statements. Therefore, these services have to be kept in mind while you are auditor of that particular client. If the services involve acting as an advocate or the audit client before the court in the resolution of the tax matter, of course, here court does not include a tribunal, so you can be there as a advocate in the tribunal, and the amounts involved are material to the financial statements in which the you are going to express an opinion. Suppose if the amounts are material to the financial statements, then you should stay away from rendering these tax services also. Preparation of calculation of current and deferred tax liabilities also for accounting entities, which will be subsequently audited by the firm, will create a self-review thread. Suppose if you are involved in calculation of deferred tax or current tax also, which may create a self-review threat, because you will be privy to such information and what stand you have taken on a particular issue, etc., may create some review threats. So the other areas are all mostly known to us. That is internal audit services. That is, the statutory auditor should not get into internal audit service. And information technology and system services. That is also, sometimes it might create a self-review threat. Suppose if you are given a service where you will test the IT systems, etc., and you come across certain weaknesses or deficiencies, then that might have impact on your independence while doing the financial audit. Therefore, you need to stay away from such services. Litigation support services, again, if you are into the tax litigation addressing services, etc., where you will be privy to certain information which might impact your opinion while rendering on the audit report. Legal services also same way. And the recruiting services, again, you can be associated with the client for a recruitment of a small and junior level people, but not for the KMPs or other management level people, where these things might create some self-interest threat or familiarity or intimidation threats. And then corporate finance services, again, might create some self-review or advocacy threats, because you will be privy to certain decisions of the management or assumptions, presumptions, etc. Therefore, all of them might create some impact while you are expressing your independent opinion. And then the management responsibilities. So this is a new section, again, dealing with the management responsibilities. The firm shall not assume a management responsibility for an audit client. That is, you should not get into the functions of the management. While you can definitely provide certain lower level services like word processing services, preparation of statutory forms, submission of the same as per the instructions of the client. These are more in the clerical nature, monitoring the statutory filing dates, etc. But you should not per se get into the management services, which is also prohibited under Section 144 of the Companies Act. But the code applies to all the entities, whereas Companies Act applies to only the companies. So therefore, under this code, you cannot provide such management services even to a partnership or a LLP, etc. And the reports on special purpose financial statements that include a restriction. Whenever you are issuing a special purpose report, which restricts on use and distribution of that, you need to be very clearly mentioning that in your engagements and opinions. And the breach of independence provision for audit and review engagements. Whenever there is a breach of independence, you need to address it and take the steps as prescribed in the code. And where if you can address all the deficiencies, fine. Otherwise, you need to, if you conclude that a breach of a requirement in this part has occurred and it shall be prescribed steps therein, it shall take the prescribed steps therein, and suspend or eliminate the interest that created the breach. That is, you have to address that particular interest, whatever that has created the breach. And in case if it is not addressable, then you need to also look at legal or other regulatory requirements and apply them. Suppose if a particular thing is going beyond your addressed prescribed in the code of ethics, then you need to look at what are the other applicables like withdrawal of audit report, etc. And then part 4B of this volume again talks of independence for assurance engagements other than audit and review engagements. That is all other assurance engagements also. More or less the same principles, whatever we have described so far in relation to audit assurance engagements and review engagements are applicable. Therefore, I am not repeating them. So all the principles, whatever we have considered so far, are also applicable for the other assurance engagements also. Now we move on to volume 2, which is essentially covers the domestic laws. That is volume 1, whatever we have spoken so far, talks of fully of our independence and compliance with the fundamental principles and addressing the various threats which are likely to hit our compliance with the fundamental principles. That's all about in various situations about covered in the volume 1. And volume 2, we are concerned with compliance with the accounting and auditing standards, guidance notes and other documents issued by ICAI, and accounting standards and engagement in quality control standards. And as you are all aware now, we have 3 sets of accounting standards. In fact, one Ind AS applicable for a certain level of companies, and one notified by our institute, and one issued by ICAI for entities other than companies. Because for non-companies also ICAI prescribed certain, but more or less ICAI standards are the same. But because certain standards are not applicable for some of the maybe provisions of certain standards for non-corporates. So ICAI has given a separate standard. So we need to apply the right set of standard for the right entity. And you are all aware that the auditing standards, engagement and quality control standards, we have in all 5 types of groups that can be classified. One, standards on auditing, SAs. They are numbered 100 to 999. Standards on review engagements, SREs. Standards on assurance engagements, SAEs. Standards on related services, and standards on quality control, SQC1. It is like a mother standard. And for every situation, there is an answer if you go through all these standards. And we need to apply the right standard for the right situation and reporting. And then coming to our Chartered Accountants Act 1949 regulations and notifications, it says members who are deemed to be in practice, they have given a definition. Section 2, subsection 2 defines what is to be a member to when supposed to be in practice. And apart from the definition, the council also resolution, by way of a resolution, permitted a CA in practice to render management consultancy and other services in the form of various items, that is financial management, capital structure, working capital, all these things. These are all coming under the council resolution. So any of these service one can render and still continue to be in practice, because management and operational audits also is a management. One may look at it as a management service, but it is not a management service, or it's an allowed service by the institute. So you can take up all these things. And where I have kept one red, that is insurance financial advisory services also can be undertaken by us. But however, it should not be insurance agency as defined under the Insurance IRDA Act or Insurance Act. So otherwise, all these things can be undertaken by the members in practice and carry on the profession. The administrative services, last one, that is word processing, etc. The lower level services can be provided without affecting your definition under Section 144 of the Companies Act or under the Code of Ethics. The Section 6 of our Act deals with the certificate of practice, that is a member in practice is prohibited from using a designation other than a CA. Section 7 deals with that. We should not be using any other designation. Directors of companies, that is, if any of us are also directors in any other company or a political party, etc., we should not use the said positions in our visiting cards. That is, if I am a director in another company, I cannot write in my visiting card that I am also director in so and so other company. Members who are members of other 2 sister institutes like ICAI or Cost Accountants Institute, they should only use ACS or ACMA at the end of their name, and they should not write the word company secretary or cost accountant, because that amounts to, you are also in practice under that act. So permission to mention qualification of other institutions, that is only if the other institution has a MRA or MOU with ICAI, that is the International Membership Reciprocal Arrangement, then you can also mention the qualification of other institutes. In fact, the ICAI case, famous case, which the institute fought for several years, Supreme Court made an observation on using of these qualifications. For the paucity of time, I am not dealing with that. So therefore, the thumb rule is that you should not use the qualification of other institutions if they are not approved. But of course, this doesn't mean that a university degree cannot be put along with your name. You can always put the university degrees. The disabilities for the membership of our institute, that is Section 8, deals with this. That is a person with less than 21 years, unsound mind, undischarged insolvent, convicted by a court. They are not eligible for continuing with our membership or even applying for that also if they are already suffering with any of these disabilities. And there are situations where a name of a member can be removed. That is, it is defined in Section 20 on these 4 situations, that is 4-5. On the death, one member's name will be removed. On receipt of request from member, suppose a member desires and expresses his request to the institute to remove his name from the members register, and if he has not paid the prescribed fee in time, and any other disabilities mentioned in Section 8, that is above 4 disabilities if a member is facing, and order of disciplinary committee or board of discipline for removal of name. If there is an order from any of these 2 committees for removal of the name for that particular period, the member's name will be removed. And membership, again, Section 24 defines situation where a penalty will be levied for falsely claiming a member. That is on first conviction, 1,000 rupees, on second subsequent conviction, 6 months imprisonment, etc. But to my knowledge, so far, no non-member has been levied with this kind of fine or penalty or anything. Companies not to engage in accountancy profession, that is Section 25 of our Act prohibits any company to act as a chartered accountant firm. And for this purpose, the company shall include LLP, which has a company as its partner. Suppose if there is an LLP, that can also form, continue as a practicing chartered accountant if it has a shareholder, if it has a company as its partner. So in a LLP, if there is a company as its partner, that such LLP should not get into the practice of CS. So we need to be clear on these things. And unqualified persons not to sign the documents, that is, this deals with non-members signing any document. There are prescribed penalties, etc. And again, maintenance of branch offices, Section 27 deals with this situation. That is, every branch should have an in-charge member for that branch. And there are exceptions for branches in the same city, hill areas. So this is permitted in the specified cities. If in one city like Chennai or Hyderabad, if a member wish to have 2 branches, there are subject to certain conditions. A branch need not have an in charge in that if it is situated in the same city. So now we come under the Chartered Accountants Act, the most interesting and defined omissions and commissions and unethical practices under the CA Act, which is contained in Chapter 5 of our Act. The very important definition is professional or other misconduct shall be deemed to include any act or omission provided in any of the schedules, but nothing in this section shall be construed to limit or abridge in any way the power of comfort. That is, the professional or other misconduct includes all kinds of activities of the members, though it is defined in this Schedule 1 or Schedule 2, but it also extends to any other area which the Director of Discipline can inquire and hold a member guilty. That is, so therefore, all our activities, whether private or professional, will get covered under this professional or other misconduct. So the professional misconduct is dealt in our Schedule 1 and 2 in the following areas. That is, members in practice, Part 1 of first and second schedules. In our both the schedules, first and second schedules, we have Part 1 dealing with members in practice, and members in service are dealt in Part 2 of the first schedule. And members of the institute generally part 3 of the first schedule and part 2 of the second schedule. Each part is dealt separately in the schedules, and other misconduct is dealt in part 4 of the first schedule and part 3 of the second schedule. We go part wise in the subsequent slides. First, let us take up the first schedule to the CPE Act. In fact, this first schedule talks more of our relationship with the external people, like acceptance of appointments or sharing of fees, or communicating with the previous auditor, or compliance with the Companies Act, etc. So, in the part of the first schedule, entirely deals with our external relationship with the society and the clients or stakeholders, in a word, if we have to call. And the second schedule deals with our professional work and negligence, etc. So in the first schedule, again, part 1 deals with the professional misconduct in relation to the CAs in practice. That is, this is applicable to only practicing chartered accountants and not for the members in industry, which is coming in the part 2. So the preamble is that a chartered accountant in practice shall be deemed to be guilty of professional misconduct if he, it starts from 1 to 12 clauses. So he will be deemed to be guilty of professional misconduct if he doesn't comply with these any of these 12 clauses. So he can be held guilty under part 1 of the first schedule under the relevant clause. So the first clause talks of allowing any person to practice in his name as a CA unless such other person also is a CA in practice and in partnership with or employed by him. That is, we should not allow any other person to practice in our name unless that such other person also is a CA and also in practice he should be holding COP and also is in partnership with or employed by us. So I cannot allow anybody other than these 3 categories, that is one of my partner or my employee, to practice on my name. So this is intended to safeguard the public against unqualified accountants practicing as CAs. There were some occasions prior to this UDIN number and all these coming, somewhere in even before these FRN, other things were required to be quoted. Some of the members here and there used to use the other some numbers and sign, but all those things were dealt with now, and now there is no chance for someone to practice because every certificate that we issue has to have the UDIN, and UDIN is quite popular in all over the country. So all the regulators, banks, everybody is aware of UDIN. So more or less, this is it is there, but hardly any cases under this clause. The second clause talks of paying, allowing, or agreeing to pay, allow directly, indirectly, any share, commission, or brokerage in the fees or profits of his professional business. That is, as a chartered accountant, I cannot allow or agree to pay directly or indirectly any share or commission, etc., to any person other than a member of the institute, or a partner, or a retired partner, or the legal representative of a retired partner. That is, I can accepting to these 3 categories of people, I cannot pay to anybody else as a share or a profit or a commission, etc., because our profession is confined. We cannot share these things. The only exception for this is that we can share the fee with the members of other bodies as may be approved by the council, like company secretaries, cost accountants, etc., because you are all aware that there is a permission under the Act for forming multidisciplinary partnership firms, which came in long back, but it has not been implemented till date due to various reasons beyond our institute's control, because some of the other bodies are not coming forward and government also has not seriously taken up the matter. So therefore, though there is a provision under the law allowing us to form multidisciplinary partnership firms, it has not been implemented so far. So therefore, if the multidisciplinary firms regulations come into force, then we will be permitted to share our fees with the others. Then the percentage of fee payable in certain states to the Register of Cooperative Societies from the audit fees of the end is also permitted, because it is a government levy type of thing. So that is also permitted to be shared. And a legal representative of a partner, say a widow, is entitled for share of profit and goodwill when the partnership deed permits. So there should be a term in the partnership deed where on the death of a partner, her legal widow or family members are entitled for share of profit, then that will be allowed, and goodwill also, whenever the partnership deed permits. So the widow may not be a member, but still she will be eligible to share the profit of the firm if the deed permits. So most of the deeds may not contain this clause, but if you, in your own interest, if you wish to pass on some benefit to the untimely or demise of any of the partners, I think you should make it visit your partnership deed and include this condition, so that it will be a smooth affair when someone passes away. Then the third condition is exactly contrary to the second condition, that is accepting or agreeing to accept any part of the profits of the professional work of a person who is not a member of the institute. There in the second clause, we are prohibited from sharing our fees to others. Here in the third clause, we are prohibited from accepting share from the others. Again, this includes multidisciplinary firms. Again, this is an exception here. The sharing of fee with a non-member is prohibited, and no prohibition on charging of referral fee to another member. That is, whenever a junior is referring a matter to the senior member, then certainly that is allowed as a referral fee. So there is no prohibition on that. Other than that, we cannot share our fee in an informal way with other company secretaries or cost accountants also, because as of now, the multidisciplinary firms law has not been implemented. The fourth clause is entering into partnership in or outside India with any person other than SEA. That is, we should not enter into partnership with anybody other than SEA. Of course, you might ask, in the first clause it has come that we should not allow. There it is not allowing a member who is not SEA to practice unless he was a partner with us. But here we cannot enter into a partnership with anybody other than the chartered accountant, who is also a member of any other professional body having such qualifications as may be prescribed. That is, the institute has prescribed certain institutions, the abroad institutions, as eligible for entering. So in all such situations, you can join and admit them. Otherwise, you cannot enter into partnerships. This is again, the multidisciplinary partnership forms are allowed. The partnership with members of foreign professional bodies not permissible. But if they have a membership reciprocal arrangement and the terms of the written into writing, then it can be done. Partnership shall be confined to the profession of CAs only. So this is, I brought it point specifically because not that all CAs or the partners of all CAs can do any other business. They should only do chartered accountancy business. Suppose if two CAs join together and do a civil works business, then that will not be eligible for under the Chartered Accountants Act. So the clause 5 talks of securing either through the services of person who is not an employee or of such chartered accountant, or who is not his partner by means which are not open to SEA, any professional business. That is, the famous quote is that a man must stand erect and not be kept by others. So with this say, we should secure our work by our own independence and stature, and not by others. So the work will follow due to the respect that they commands, and acts of partners, employees of the firm in securing the work should not be in non-compliance with clause 6 and 7, which we will deal now. So one can secure the professional work through the services of a person who is not an employee of such CA. That is, you can secure the work through your employees or your partners and not through otherwise. Clause 6 talks of soliciting clients or professional work either directly or indirectly by circular, advertisement, personal communication, or interview, or by any other means is prohibited. So if you solicit work through any of these means, then one may clearly get caught under this clause and held guilty. There are certain exceptions for this. That is, there is no prohibition on securing professional work from another CA in practice. That is, you can always approach your friend or senior for work who is in practice, and responding to tenders for professional work. This is permitted, subject to compliance with the guidelines issued by ICAI in 2016. You can always respond to the tenders. And you should not respond to any tender for services which are exclusively for CAS attest functions. That is, one should not respond to any tender for services which are exclusive for CAS attest functions. Then, however, if minimum fee is prescribed in the tender or where the area is open to others, one can respond. But of course, this clause, most of the tenders are not following because they are not quoting any minimum fees. They are asking the CAs to quote. So it is going on. A member can respond to tenders which are open to others apart from CAs if it is for the falling within our professional services. No advertisement or notes in the press can be circulated soliciting professional work. When I was in the council, we have come across some cases where some members have used to release advertisements in the profession that I am available in so-and-so city on so-and-so at so-and-so phone number, etc. So they are all not permitted under clause 6 to solicit the work. The classified advertisement in CA journal, yes, you can offer it in our ICAI journal. And changes in partnership, phone numbers, etc., can be released through advertisement. But again, it should be reasonable with reference to the city where you are contained or the state where you are remain. It should not be like a huge advertisement or a one-page advertisement. And applications for empanelment for allotment of audit permitted, fee can be quoted. That is, you can always apply for empanelment to these government bodies or banks, etc. And fee can also be quoted if you wish. And then publication of books, articles, or presentation, etc. Only the name of member with prefix CA can be mentioned in the if you are writing a book. And no professional attainments of member firms shall be used. You should not quote any of your attainments in the book. And greeting cards or wedding invitations, etc., can be used with the designation CA as well as the name of the firm. And advertisement for silver, gold, or jubilee celebrations of the firm are also permitted, because if you have completed certain number of years in the profession, you can always release a small advertisement that we have completed so many years, etc. Sponsoring activities, yes, you can sponsor any of the activities of ICAI with the approval of CPEC. And other sponsorship CSR activities, members' name with CA prefix is permitted. Advertisement of teaching, coaching activities by members, that is, members cannot accept teaching work of not more than 25 hours in a week. More than 25 hours we should not accept. And member cannot advertise his teaching or coaching activities. The members may put a board outside the coaching center with name, subject taught, etc. Suppose if you are associated with a coaching center, outside you can put your board, what subject you teach and your name, etc. Sharing a firm profile with prospective client. It can be shared in response to the proposed client's request query. That is, whenever your client or a prospective client is asking for sharing your profile, you can definitely share your profile, but always keep it for private and confidential or something like that. And these are all others, no television or movie credits. Whenever you are appearing in the TV or other public media areas, you should not self-declare your professional attainments, etc. Soliciting professional work by making roving inquiries is prohibited, because in some of our government departments, they used to complain to the institute that some of your members are coming and making roving inquiries for allotment of audits, etc. That should not be seen. And seeking work from professional colleagues permitted. Representation which an auditor is entitled to make under Section 144 of the New Companies Act. Wording of representation should be that it does not tantamount to soliciting or canvassing for continuation of audit. That is, whenever you are not proposed for reappointment, your representation should not look like a soliciting or canvassing of continuation of audit. And acceptance of original professional work of a client introduced by another CA. That is, whenever a client is introduced to you by another CA for a particular referral work, you should not accept the original work unless the client arranges a meeting with the others and the other member also willing to part with. So the other member should refer the original work also with you. Then publishing of advertisements and box numbers is prohibited. You should not give post box numbers. Educational videos, yes, you can upload on the internet, but there should be no reference to your firm in which you are associated. No contact details on the website address also can be given in such videos. Then let's come to the clause 7, which is also again important in terms of advertising your professional attainments or services or using any other designation, etc. Accepting the membership of the institute is prohibited. We should not use any of these things. But there are here and there certain exceptions. That is, advertising of professional attainments is prohibited. Other designations, only CA designation should be used. And the date of setting up a practice, etc., should not be mentioned on the professional stationery. Unlike business entities where people generally keep within brackets established in so and so year, we cannot put our establishment date. And practicing as advocate or company secretary, etc., you should not use the designation of CA in that card. If you are practicing as an advocate, you should not write the word chartered accountant, but you can always use your 3-letter degree, ACA or FCA. Mention of firm name only on the professional documents. You cannot mention your professional firm name on all your other non-related professional documents. And notice in the press relating to success in exams should not contain undesirable publicity. Whenever a person is securing a big rank or 1 or 2, something like that, it should be reasonable. That's what. Reports and certificates to be issued as far as possible on letterheads. Now, of course, in the computer era, we are using straight away even our address also printed in the letterheads by the computer. That is also permitted. Appearance of members on electronic media, and whenever you are appearing in electronic media like TV interviews, etc., you should not exaggerate yourself or your firm, etc. Important appointments or views on public importance should not contain again reference to your personal achievements. That was, if you are giving an interview to a TV channel, you should not claim or give reference to your personal achievements and your firm's achievements. The organizing training courses, etc., for own staff should not be open to client staff. That is, whenever you are organizing training program for your own staff, they should not be allowed for your client staff. Website guidelines of ICAI are there. Whenever you are establishing your own website, you should strictly follow the ICAI guidelines. Writing articles or letters to the press, etc., you can write. Size of the signboard, earlier there used to be some size, but now they have made it appropriate visibility and illumination. So you can't have a huge signboard. It should be reasonable for your professional designation. A member can have a nameplate at his residence with CA, but not with the name of your firm. You can't have it at your residence. Public announcement with details of directors, etc. Whenever you are joining a company which is releasing a prospectus, etc., in which you are a director, you should ensure that the announcement do not advertise your professional attainments. Networking of firms and networking guidelines. That is, whenever you are joining a network, you should use the words network firms on their professional stationery. Network firm may advertise to the extent permitted by the advertisement guidelines. So firms cannot join networks which are not registered with ICAI. Members may be aware that there is some complaints are going on against certain firms which have registered with networks which are not registered in India with ICAI. So the matter is sub judice, so I don't want to deal in that subject. But definitely the current rule is that you cannot join a network in any network unless it is the network itself is registered with the institute. So one should be careful while dealing with this networking. Then use of logo. Definitely you can't have a separate logo of your own. It's not permitted. Then common CA logo. Of course, you can use the tick mark which is allowed for members. Guidelines for elected members. That is for those who are representing us in the branches or the regional councils or the central council. The institute, in fact, permits these members to use a designation, but not on the letterheads, etc. Only the visiting cards are given as permitted by the ICAI. This is again another important clause where I have come across many complaints under this clause. That is, accepting a position as auditor which was previously held by another CA without first communicating with him in writing. That is, whenever you are accepting an assignment for the first time from which was earlier held by another chartered accountant, you should communicate with him in writing. Generally, we call it as NOC, no objection certificate from the previous auditor. Here, the important thing is that it is applicable to all the audits of all types of audits, including bank branch audits, strictly speaking, concurrent audits, tax audits, or statutory audits under the Companies Act or Insurance Act, whatever it is. Anything audit, even charitable institutions also, it is applicable to all kinds of audits. And the grounds for non-acceptance of audit to be stated clearly, that is when the incoming auditor writes to the outgoing auditor, and if he has certain objection for the incoming auditor to accept the assignment, he should be clear in writing his objections. And the non-compliance with 139, 140 of the Companies Act, read with clause 9 of part 1 of first schedule, we need to keep this in mind, because we read this clause in the next slide. That is clause 9. We need to keep the non-compliance with the Companies Act provisions. Non-payment of undisputed audit fee by auditee other than a SIC unit. So this is also a clause for objecting for assignment. Generally, if there is a pendency of audit fees pending, in fact, when we are writing to the previous auditor, we should also make a sentence that whether any undisputed audit fee is pending payable by the entity. So unless that fee is cleared, he can always object for the incoming auditor to accept the audit. But this is not applicable for a SIC unit. Fees pending due to non-availability of previous auditor. Suppose if there is a situation where the fee is pending because of non-availability of auditor, that is a previous auditor is absconding or not available. In such situations, if depending on the facts of the case, one can accept the new audit, even though there is a pendency of fees. Course of action in case of change of auditor, whenever there is a change of auditor, now it is for 5 years. So that time one should follow the procedure. Duty of retiring auditor to respond with correct information. That is, whenever you are retiring from a company after 5 years or 10 years of your time, you need to respond with correct information to the incoming auditor for his communication. And incoming auditor can act after waiting for a reasonable time for a reply. In most of the cases where complaints have come under this clause, we have come across a situation where the incoming auditor writes a letter to the outgoing auditor today, and he signs off on the same day or on the next day or within 2-3 days. So in such situations, you should always give a reasonable time for the outgoing auditor to respond. And the ideal situation is, wait for at least a week's time or 2 weeks' time, or mention in your letter that if you do not respond within a period of say 10 days, it will be deemed that you have no objection for my accepting the appointment. At least you should say that, and that should be a reasonable time. And most important thing under this clause is positive evidence of delivery of such communication is required. That is, presently it is it can be sent only by RPAD or personal delivery. And the institute is also considering to introduce this acknowledgement of mail from the retiring auditor's official mail ID on the UDIN portal. These C and D are yet to be implemented. So therefore, presently there are only 2 modes available, that RPAD, registered post acknowledgement view, or personal delivery. The incoming auditor should compulsorily have the evidence of sending the communication to the outgoing auditor. Whether he responds to it or not, that is a different issue. But you will be discharging your function when you keep evidence of sending this letter. Certificate of posting is no more available, and earlier in some cases we have seen in the olden days prior to 2010, etc., members used to resort to create a conclusive certificate of posting receipts, etc., which is now no more valid now. And even I think post offices also don't have that kind of facility. And if there is a premises of the previous auditor is locked, there is a new guidance available. That the new guidance is nothing but we should check whether the auditor is really not there or etc. And there is a guidance available. After reasonable check, if they you find that the previous auditor is not there, you are out of problem. Then firm not formed at the registered address, new guidance available. That is the code of ethics. There is a write-up on this. whenever the firm, the old auditor is not available at the registered address, you need to reasonably check and where it is, etc. And if you, after reasonable effort, if you can't trace it, no problem, you can go ahead. And special audit under IT Act and other acts also, it's a healthy practice to communicate with the statutory auditor. Though he is not your previous auditor, but our code suggests that it will be a healthy practice to communicate with the statutory auditor whenever you are accepting a special audit, forensic audit, or IT Act, etc. Because the statutory auditor can throw some light on the facts prevailing in the company. Then communication in case of assignments by other professionals. This is also a healthy practice, because if a particular company or entity has an internal audit done by non-CAs and you are entering for the first time, it is a healthy practice to communicate to the previous auditor, though they are not CAs. A lack of time in acceptance of government audits, bank audits, etc. At least you make it clear in the acceptance letter that it is subject to professional objections, if any, from the previous auditor. So while acknowledging on the appointment letter, you better make a mention that the audit is accepted subject to professional objections, if any, from the previous auditor. In most of our bank branch audits, at least I did not come across most of the members writing to the previous auditor saying that there is no time left, etc. But at least from your side, as soon as you get the appointment letter, nowadays banks, so most of the banks are also furnishing the previous auditor's address. You can definitely send a mail to the previous auditor, and mostly nobody will question. But it is always safe that you send a mail to the previous auditor, because in one case where I have come across, the concurrent auditors were appointed by the banks only nowadays from the empanel list, and one of the auditor who was doing the audit did not find his name in the next year audit. Unfortunately, the incoming auditor did not communicate with the previous auditor, and he filed the complaint, and it went on for some time. And finally, the incoming auditor was found guilty for the simple reason that he did not communicate with the previous auditor. So please do not allow that kind of a situation, so that you will not be held unnecessarily under this class. Now we move on to this acceptance as an appointment as auditor of a company without first ascertaining from it whether the requirements of section 225 of the old act, currently 140 of the act, is complied with or not, because this clause is a verification of the company's compliance with section 225 of the old act and corresponding 140 of the act. The incoming auditor has to first verify the procedural requirements, whether they have been followed by the company or not. This importance is cast on us as an incoming auditor. You cannot simply accept the statement of the company that they have complied with the act. At times, so sometimes, the section 225 or 140 would not have been complied with. Therefore, the institute is suggesting to check the records of the company, including taking copies of those special notice given before the general meeting, and the notice to the retiring auditor should have been sent by RPAD. Replies received from the auditor were sent to all the members of the company. All these things have to be verified by the incoming auditor and ensure that the company has complied with the section 140 of the act. And do not rely on the verbal assurance given by the company about the compliance of Companies Act requirements. Verify and collect the documentary evidence, particularly in the companies which are under dispute in the management, etc., where the members will not comply with the sections, the minutes they may not be writing, or AGM would not have been held. In all such situations, unnecessarily we get caught because we have not verified, we have not cared to ensure that the company has complied with that. Several cases have come up under this clause also. So therefore, it is very important that whenever you are accepting or entering into the accepting a new assignment where earlier auditor was there, so you need to verify whether the proper procedure has been complied or not. There is another unjustified removal. Earlier, there used to be a committee called SESURA, committee on unjustified removal of auditors, etc. There is a procedure left here. That is, when an auditor resigns or does not offer himself for reappointment, he shall send a communication in writing to the board. Of course, this is not being followed by most of the firms in the country. This will come into play only when there is some dispute in the outgoing auditor and the company, etc. So the incoming auditor, before accepting such appointment, shall get a copy of the above representation and consider. And then when an auditor, though willing for reappointment, if he has not been reappointed, he should file with ICAI a copy of statement. Because now, see, for example, we have now a 5-year term. At the end of 5 years, whether the company has to compulsorily appoint the same firm or not is not there. So they can as well look for a new auditor. But in such situation, I think because the eligible auditor is not being reappointed, I am of the personal view that the company and the incoming auditor should take care to look at the rules of the section 140 so that there will be no further complication in that, because the eligible auditor is not being considered for reappointment for one more term. So whether section 140 would apply, I am not able to give any clear view on this, because there is no write-up in the Code of Ethics also on this. But to be on a safe side, I think you can better comply with section 140. Though it may not be strictly applicable, because at the end of 5 years, the company may be at liberty to appoint another firm. So therefore, we need to be a little careful while complying with this. Then coming to clause 10, this is charging or offering to charge or accepting or offering to accept in respect of any professional employment fees which are based on a percentage of profits or which are contingent upon the findings. That is, these things will come across when you accept an appointment with the condition that if I win the appeal, I will charge my fee will be X percentage of the benefit that is accruing to the company. That should not be accepted. But there are a few exceptions for this. The exceptions are only a receiver or a liquidator. He can accept the assignment on the percentage of realization or disbursements made. Auditor of a cooperative society, he can accept it as a percentage of capital or gross or net income of the society. And valuer for the purpose of direct taxes, he can accept as a percentage of the property value. And in the case of certain management consultancy services, as may be decided by the council, that is, the council has taken power to prescribe what is the maximum allowed as a percentage for these services. And fundraising services, debt recovery services, services related to cost optimization, etc. For these things, you can one can accept as a percentage of that. Other than this, we cannot accept any professional assignment as a fee. Our fee as a percentage of the contingents are happening. Then coming to clause 11, that is engaging in any other business or occupation other than the profession of chartered accountants, unless permitted by the council, so to engage. That is, if the council permits you to engage in any other business, yes, you can accept and still continue to be practicing. But otherwise, you cannot accept. There are certain exceptions for this clause also. Again, director, promoter, or promoter director. That is, if you do not have any substantial interest, which we will deal it in the second schedule, in a company, you can be permitted to be a generally simply-sitter director, or you can also promote a company so long as you don't hold any substantial interest in such new company. And you can also be a director of a company, irrespective of whether the objects include areas which do not fall within the scope of the profession of CA. That is, you can join a company, promote a company with just a meager shareholding, even for a civil construction or transport or anything. Even though it is not connected to CA, you can still be a director. And what is the generally permissions granted is, that is employment, tutorships, acting as surveyor, full-time employment in non-business concerns. All these things are there. But in 2004, there is a clear council guideline has come where you cannot engage in any other profession. If you are engaging in any other full-time profession without the permission of council or outside the permitted areas, then you will become a part-time holder of COP and you cannot do any attest function. So one should be careful to see that you do not, so long as you hold a full-time practice or you wish to hold a full-time practice, you do not undertake any other than what is permitted to be your main occupation. If you are becoming a managing director of a company, you need to apply to the institute, and invariably institute will say that you can continue your COB but under part-time practice. Therefore, one should be careful. The exceptions are the liquidator, trustee, executor, etc. Other than this, we need to take the permission of the institute. That is director simpliciter. You can become an independent director or a nominee director, etc. So long as you do not hold a substantial interest in the company. And a member in practice in a HUF doing business. Suppose if you are a member in practice and you are also a member of your HUF, Hindu Undivided Family, and so long as you do not actively involve as a karta of that HUF, no problem, you can be permitted. But if you are also becoming a karta of that HUF and where substantial time of yours is devoted to the business of that HUF or running of that HUF, then you need to inform the institute and take its permission. And however, if the funds of the HUF are invested in a business, that does not amount to your business if you are not a karta of that. So therefore, whenever you are leading a HUF, you need to be careful to explain the institute on that you are not spending any substantial time in the business of that HUF. And then coming to the last clause of this part, it is said that allowing a person not being a member of the institute in practice or a member not being his partner to sign on his behalf or on behalf of his firm. So that is, you should not allow any person other than your partner to sign on behalf of your firm on any financial statements, but you can always sign allow your juniors to sign routine documents, etc., audit questionnaires, etc. And only on the financial statements, definitely the partner only has to sign. And other routine correspondence or acknowledgements, etc., can be signed by your office persons. So now we move on to the part 2 of the first schedule, which talks of professional misconduct in relation to the members of the institute in service. That is, there are 3 clauses in this, which are applicable only to the members who are in service. These clauses are not applicable to the members in practice. The first clause is like in the first clause of the part 1. That is paying or allowing or agreeing to pay directly or indirectly any person any share in the emoluments or the employment. That is, whenever you are engaged for an assignment in a company or an entity, you should not pay or allow or agree to pay directly or indirectly to any person a part of that amount. The second thing is again opposite side of the first clause, that is accepting or agreeing to accept any part of fee, profits of gains from a lawyer, a CA, or a broker engaged by the company where you are working. That is, you should not accept a kickbacks or some kind of a referral fee from the others who are also serving your company where you are employed. Only these 2 clauses are there in the part 2. And now we move on to part 3, which is the professional misconduct in relation to the members of the institute generally. That is, this is a general clause, both applicable for both in practice or in service. That is, one is not being a fellow of the institute to act as a fellow of the institute. That is, those who are not fellow members of the institute should not represent themselves as a fellow of the fellow member. And if he does not supply the information called for or does not comply with the requirements asked for by the institute, council, or any of its committees, board of discipline, etc., then one can be held guilty by the institute. So therefore, make sure that we always supply the information, whatever is called by the particular committee or council or officials of the institute on any of the matters. Particularly, members will be getting only from the director discipline on any of the disciplinary matters. Otherwise, mostly the bank audit, etc., if they call for certain additional information, we need to provide it, because these 2 clauses are intended to empower the council to enforce the discipline over the members and for obtaining information from the members wherever required. Then we move on to part 4, which talks of other misconduct. So far, we have spoken only about the professional misconduct in the first 3 parts. And this comes other misconduct, which is also very important. And most of the complaints nowadays are coming under this other misconduct. That is, a member of the institute, whether in practice or not. This is applicable again to both practicing as well as service members. If he is held guilty for any civil or criminal court for an offence which is punishable with imprisonment for a term not exceeding 6 months. That is, if a member is held guilty by any civil or criminal court for any offence which is punishable with imprisonment for a term not exceeding 6 months. What if it exceeds 6 months, it will come under second schedule. So therefore, if a civil or criminal court holds a member of guilty, irrespective of the punishment again, but that offence should not be punishable with imprisonment for a term not exceeding 6 months. If such kind of guilty was held by any civil or criminal court, then such member will be automatically held guilty under the first schedule, falling under this clause 1, part 4 of the clause 1. In the opinion of the council, brings disrepute to the profession or the institute as a result of his action, whether or not related to his professional work. This is a very, very important clause where nowadays most of the complaints are coming under this. The complainant says that he is unfit to be a member of the institute and he is bringing disrepute to the profession. Several cases were held holding the members guilty under this clause because even our action need not be related to the profession. Even our action in a general public life also can be brought under this clause. Therefore, one should be very careful in ensuring that we do not get caught wrongly under this clause. So now we move on to the second schedule. The second schedule talks of our professional work and the negligence, if any, in doing our work. So this has again 10 clauses. Part 1 has 10 clauses. So the first clause is that if he discloses information acquired in the course of his professional engagement to any person other than his client, so engaging him, or without the consent of his client or otherwise than as required by any law for the time being in force, one may be held guilty if he discloses any information in other than these 2-3 situations. But there are a few exceptions for this. That is, one is if the disclosure is required as a part of performance of professional function. Yes, we need to disclose, like for example, the balance sheet we are signing or the certificate we are issuing. As part of our certificate, if we have to disclose certain numbers, then yes, we are permitted, and not permitted to submit the client information to any court on his own. That is, you cannot sumo to submit the client information in any court, in plead or submit. But if the court directs you, you have to furnish that information. If disclosure is required in other cases, consent of the client is to be obtained. For example, you may be called by a banker of the client to seek certain details of your client, because when they are going for rating, sometimes we get a call. It is always better to take at least oral approval or in writing from your client that to respond and furnish certain information relating to the client. And working papers of auditor, you need not share your working papers. Even in the case of joint auditors also, you need not share your working papers with the joint auditors, but you can always share the information. Even in the case of main auditors and sub-auditors, branch auditors, the main auditors have no right to call for the working papers of the branch auditors, but they have a right to seek clarifications or visit the branch. So in all these situations, you can keep your working papers perfectly with you and do not share it, but you can always pass on the information relating to whatever they have asked. Again, the sharing of information, regulator to share to a client or a regulator after obtaining the client's consent. Suppose if SEBI is calling for certain information from your client, better take the client's consent before sharing that information. And suppose if the disclosure is required by law, definitely we cannot set out all the circumstances. The institute itself has expressed that we cannot set out all the circumstances under which disclosure information may be required by law. But suppose if you sharing of information of a client as sought by a regulator and would be permissible and would not require client's consent. But as a matter of abundant precaution, you can inform the client that you are sharing certain information as required by SEBI or RBI, etc. And in relation to role of CAs in relation to unlawful acts by their clients, there is a section 39 of CRPC and 126 of the Evidence Act, etc. They're giving some liberty for us. No duty is cast on a member to inform the IT authorities about the taxation mischief or whatever they have done. So you are protected to that extent. But if you are coming across certain frauds or anything which is non-compliance, Now under the NOCLAR, which we have discussed in the volume 1, you may have to report that. So be careful while reporting on these frauds, etc. And the second clause of part 1 of second schedule talks of certifying or submitting in his name or in the name of his firm a report of an examination of financial statements, unless the examination of such statements and the related records have been made by him or by a partner or an employee in his firm. That is, in other words, you cannot certify or anything without it being examined by you or your firm or your colleagues. Particularly the institute has dealt with this matter in this case, in the case of a joint auditors, because both of you are signing in the both 2 or 3 or 4, or in the case of State Bank of India, I think there are 10 or 11 auditors. All are certifying that the accounts are true. So what is the role and responsibilities of the joint auditors? If the work is divided among joint auditors, each of them are responsible for the allotted work. Because while coming to the financial statements, everybody will sign. But if within them, if there is a division of work, then they are responsible for the area which they have taken up. However, all the joint auditors are jointly and severally responsible for the audit work which is not divided. Suppose if there was no division among the joint auditors, then everybody is responsible for everything. Then decisions taken under audit planning, matters brought to the notice by one of them and others agree for it, examining the financial statements of the company. In these cases, all are responsible. Then for detailed consideration of the subject, please refer to SA 299, Joint Audit of Financial Statements, and go by the guidance available in that particular standard on auditing. Then the third clause talks of permitting his name or the name of his firm to be used in connection with an estimate of earnings contingent upon future transactions in a manner which may lead to the belief that he vouches for the accuracy of the forecast. That is, in a nutshell, if we have to say, you cannot associate your certification with any projected earnings or project profitability statements. But there is an exception for this, that SIE 3400 is there, where there is a separate report. And in the prospective financial information, particularly in the prospects, etc., prospectuses issued by various companies, we do certify the future projections, but the report takes care of all those things. But particularly this complaint is seen from various banks where our members are issuing left and right certificates on the projected profitability statements without even some cases without any report or even a sentence. Members are issuing it, but this is not correct. One has to be careful while issuing such projected profitability statements. At least either you write saying that the above information has been compiled as per the information provided by the management of the entity, or at least you follow the report as available to you under this SIE 3400, which is a 2-page report which protects you from possible consequences. Otherwise, today what is happening, most of the banks are filing complaints whenever an advance is becoming NPA. They are enclosing the certificate given by the chartered accountant and then saying that your member has certified these things. So therefore, always be careful either to issue a full report as required under SIE 3400, or simply say that you have only compiled the statement as per the informational explanations given by the management. Stop it there. Do not extend to say that true and correct or true and fair, etc. Then the fourth point is that expressing his opinion on financial statements of any business or enterprise in which he, his firm, or a partner in his firm has a substantial interest. That is, whenever you or your partners or your family members has a substantial interest in any client of his client, you cannot express your opinion on the financial statements of such business. That is, what is meant by substantial interest is said that under the Companies Act regulations. In our CA regulations 88, we said 20% of the voting power or shareholding amounts to substantial interest. Member, his firm or his partner or his relative has a substantial interest also gets covered in this. And the financial statements word includes both reports and certificates, usually given after examination of accounts or financial statements. That is, whenever you are issuing certificates or capital structure or loans, etc., that also amounts to financial statement. And in addition to the above prohibitions, The council also decided not to permit a CA employee to certify the financial statement of his employer company. Now, practically, it cannot be done because as per the 2004 council guidelines, a member who is working in a company cannot do any attest function. And it amounts to violation, and he is a part-time employee only. Even though he may be holding COP with the permission of the employee or without telling him also, but in such situations, he cannot certify the employer's financial statements or certificates. And he should not accept the auditorship of a college or an educational institution where he is working in the same institution on part-time basis. And he should not accept the auditorship of a trust where his partner or is a trustee or employee of the said trust. That is, wherever your colleague or partner is a trustee, you cannot accept the auditorship of that trust. And this clause are applicable to all attest functions. And where the member is a director, officer, or employee in a company, Section 141 hits. Therefore, you cannot anyway certify that company's accounts. And the director simpliciter, all 141 requirements of the Companies Act, you cannot do any of those things. Statutory auditor not to be the internal auditor. And one important thing is also an internal auditor cannot do the tax audit under the Income Tax Act or GST Act. This is a council guideline came where sometime in 2009 or so, where the institute has notified that an internal auditor cannot do the tax audit of the same entity because internal audit is part of the management function. Therefore, institute has prohibited such internal auditors from doing the tax auditor. And 2 years cooling off period after completion of tenure as a director. That is, these 2 years, one should not accept the audit of the entity where he was a director. Members to satisfy whether appointment is as per the statute. I mean, if there are certain memorandum articles of associations of some companies also specifies what should be the mode of appointment of auditors and the eligibility or number of partners, etc., firm size, etc., are specified in some business agreements or in the articles of association of a particular companies. In all such situations, the auditors have to ensure that the appointment is as per the requirements. And regulatory requirements and requirements of trust deed articles, etc., have to be complied. Then now coming to the very important clauses, that is, fails to disclose a material fact known to him, which is not disclosed in the financial statement, but disclosure of which is necessary in making the such financial statement where he is concerned with that financial statement in a professional capacity. Suppose if you are concerned with a professional and financial statements where you are signing on the balance sheets, and if you fail to disclose a material fact known to you, here the word material may be noted, the material fact known to you, but you have failed to disclose it, which is required to be disclosed in making the statement in a professional capacity. So therefore, you should not fail to disclose a material fact known to you. So this is an important thing, and materiality, one should refer to 320 SA 320 materiality, and misstatements include omissions are expected to be material if they individually or in aggregate expected to influence the economic decisions of the users. So therefore, any material fact which is having an impact on the financial statement, and if you fail to disclose such material facts, then one can be held guilty under that. Judgments about materiality are to be made in the light of the surrounding circumstances, size, nature of misstatement, etc. And financial statements, again, is specified that they cover both reports and certificates. That is, if you are issuing a capital structure certificate, and if you fail to bring out a material fact known to you in that certificate also, will bring the under this clause. Then the 6th clause also, it is the same thing, but here fails to report a material misstatement. There it is a material fact known but not reported. Here, if you fail to report a material misstatement known to you appear in a financial statement with which he is concerned, again the same observations of what is said in clause 5, materiality, and what is a misstatement, and whether it is appearing in the financial statement or not, all these things have to be taken care. Most of the cases where the mistakes in the financial statements are covered under the clause 5, 6, 7, and 8, all these 4 clauses. So one should be careful while reporting, while not to, fail to report a material misstatement. Suppose if there is a material misstatement in the balance sheet and you did not report, then straight away it will be, this clause will come to operate. Then the clause 7 talks of does not exercise due diligence or is grossly negligent in the conduct of his professional duties. Though it is a very simply worded and the smallest clause in the entire our 2 schedules, but it has a huge meaning in it. And most of the cases, complaints which come on the negligence, they quote this clause. So as I said, though it is a very simply worded, very vital clause, which usually gets attracted whenever it is necessary to judge whether a member has honestly and reasonably discharged his duties. Diligence again has not been defined, but diligence encompasses the responsibility to act in accordance with the requirements of an assignment carefully and thoroughly. That is, diligence as a prudent chartered accountant, you are expected to act in any as a professional function. So you need to be very careful to exercise your functions with the due diligence. And what constitutes a professional misconduct? Professional misconduct cannot be found merely on finding a bare non-performance of a duty or some default in performing it. A small mistake cannot be termed as a professional misconduct, but definitely misconduct implies failure to act honestly and reasonably, either according to the ordinary and natural standard or according to a particular profession. Though the institute guidance itself says this, but when it comes before the disciplinary committee, all misconducts, all mistakes, they hold it as a under clause 7. Therefore, we need to be extra careful to ensure that our discharge of functions do not get attracted by the clause 7. This term is a fairly wide import, but generally speaking, it implies fairly serious cases of misconduct or gross negligence. So it is supposed to be only for serious cases of misconduct. But now all misconducts are treated under this clause. Therefore, we need to be extra careful. Negligence per se would not amount to gross negligence, but in the institute, disciplinary committee and BOD, let me tell you, all negligences, they are treating it as a gross negligence. And gross negligences, some instances, failure to verify securities, failure to reconcile the bank balances, failure to check cash balances, all these things are some of the instances. But any mistake in the balance sheet or financial statements where you are certifying would squarely come under any of these. Sometimes most of the complaints, they quote all the 4 clauses, clause 5, 6, 7, and 8 also. So the 8 talks of if you fail to obtain sufficient information which is necessary for expression of an opinion, or its exceptions are sufficiently material to negate the expression of an opinion. Here between 5, 6, we have seen failing to report a material fact, failing to report a material misstatement, gross negligence, or not following due diligence. But then the clause 8 talks of if you fail to obtain sufficient information, that is, if you have not collected sufficient information before expression of an opinion, then one can be held guilty under this clause 8. That is, a member should not express an opinion before obtaining the required data and information. That is, if you don't collect the full information and express an opinion, then you may be held guilty under this information. So whenever you did not get the full information as required by you, then you need to modify your opinion as referred to in SA 705. That is, modifications to the opinion in the independent auditor's report. So you cannot simply say that I did not get the information, therefore I have released a unmodified opinion. You need to bring it to the attention of the by way of a modification and as given in SA 705. Then number 9 also, many times people invoke section clause 9 also. This is fails to invite attention to any material departure from the generally accepted procedure of audit applicable to the circumstances. That is, if there are certain deviations or material departures from the generally accepted audit procedures, and you have not invited attention of the readers, then that would bring us under this clause. What is generally accepted audit procedures? That is, whatever our standards are prescribing, and you should follow the generally accepted procedures. And if there is any deviation, And if it is likely to be material, then you need to bring it to the attention of the readers. That is emphasis of matters paragraph, all those things come under this. That is guidance available from ICAI on many aspects in the form of guidance notes, etc. Audit of listed companies to have peer review certificate. In fact, I have come across a few instances in the recent past where some of the members, without holding a peer review certificate, are auditing the audit of listed entities. And sometimes SEBI is asking for it, sometimes our own institute is asking for it. So at least unless your firm is under review, please do not accept and issue a report for listed entities. You need to be careful, and the firm registration number and membership number of the member have to be quoted in all the reports, and UDIN has to be quoted effective from 1st July within the time limit you need to obtain and quote in the documents. And still, though this is in force for the last almost 4 years, still we are coming across some situations where some of the members are not taking. And please remember to know that UDIN has to be quoted in all situations wherever you are issuing a certificate. It is not only for the balance sheets and the financial statements, but also for all audit reports and certificates issued under your name, including for internal audit reports. So you need to quote the report, whether the client is asking for it or not, you need to quote this UDIN. Otherwise, it amounts to violation of the guidelines. Clause number 10 is failing to keep monies of his client other than the fees or remuneration or money meant to be expended in a separate banking account or to use such money. That is, whenever you receive certain amount from the client for meeting certain expenses, you need to keep it in a separate bank account. Unless it is very quickly, suppose you are receiving it today and paying it today itself, then you can do that. But otherwise, if it is likely to be some time that the member's money will be spent on his purpose, then you need to keep a separate bank account. And advance received from client against services to be rendered does not fall under this clause. Suppose if you receive an advance against audit or as per part of your audit engagement letter, etc., then that will not come under this. And money received intended to be spent in a reasonably short period need not be put in a separate bank account. Money received in the capacity of a trustee, etc., should be kept in a separate bank account. There were a few cases under this clause also where some of the clients in the good olden days have given the money to the chartered accountant for payment of their taxes, and a few of our members misused it and sometimes misappropriated it, and those things have come before the council, and such members were held guilty. Therefore, it is always better to have a separate account, client's money or something like that. And whenever, suppose for an incorporation of a company, if you are given some advance, so you need to keep that in a separate bank account if you are going to pay on behalf of the client also. So that kind of situations, please avoid. Now we come to the second schedule where it talks of professional misconduct in relation to the members of the institute generally. Here in the second schedule, it is applicable both for members in practice as well as to the members in service. That is, if one contravenes any of the provisions of this Act or the regulations made thereunder, or any guidelines issued by the council, that is, if you are not complying with any of the provisions of our Act or regulations, etc., then one can be held guilty under this clause 1 of part 2. And what is the clause 2 talks of being an employee of any company. If you disclose any confidential information acquired in the course of your employment, except as and when required by any law for the time being in force, or except as permitted by the employer, then one will be held guilty, because being an employee of a company, you are an employee of a company, you cannot disclose any of the information of the company without the employer's permission or as required under the law. Then the third clause is on includes any information statement, whatever you submit with knowing them to be false. There were some instances where some of the members, without holding COP, used to sign the tax audit reports. That was opened, and many members were issued notices, etc. In that scenario, there used to be some false information, etc. So if any member furnishes any information or statement knowing to be false to the institute, then he can be held guilty under this clause 3. Now come to the part 2, again, the last clause in this part 2 is defalcating or embezzling monies received in his professional capacity. This is also a very wide term, and if you defalcate or embezzle any money received in your professional capacity, one can be held guilty under this clause. Then part 3 talks of other misconduct in relation to the members of the institute. If you recall, in the first schedule, part 4, we have considered where a member is held guilty if he was by a criminal or a civil court with imprisonment for a term not exceeding 6 months. Here, if a court decides and holds a member guilty with imprisonment for a term exceeding 6 months, then automatically he can be held guilty under this clause. And this is all about our code of ethics and schedule 1 and 2 of the institute. Now I will also take another 3 minutes to just deal with the various authorities. Yeah. Various authorities to deal with the disciplinary matters. The first authority in this disciplinary matters is that is the director discipline. This is the director discipline. This is the first authority in this disciplinary matters, and he shall be appointed by the council. It is an independent authority headed by an officer of the institute designated as a director discipline. His job is to receive, register, process, and place the complaints before the BOD or DC. That is, even information cases also, he can only process and place before the BOD DC. BOD means Board of Discipline and DC means Disciplinary Committee. The second authority is Board of Discipline, which is again constituted by the committee from some of the council members and the government nominees. It comprises of one chairperson who is generally be the president, vice president, or any council member, and one member from the council and one member nominated by the government. This is defined in the Act itself, so there one cannot be deviated from this. And this job of this Board of Discipline is to inquire into the professional and other misconduct mentioned in the first schedule. If any of the activities of the member is falling in the first schedule, then it comes before the Board of Discipline. And the Board of Discipline, when it is of the opinion that a member is found guilty of misconduct under any of the clauses of the first schedule, it will give an opportunity to the member, and it will award the punishments also. And the punishments can be in any of the following 3 forms. That is, 1, a reprimanding or removing the name of the member from the register up to a period of 3 months. That is, for any first schedule offences, a member cannot be removed beyond 3 months, and impose a fine which should not exceed 1 lakh. That is, up to 1 lakh a fine, or 2 can be also done. One member can be removed for name can be removed for a month, and also a fine of 1 lakh can be levied. So any 2 of these things, 2 and 3 can be done simultaneously also. This is the BOD's powers. And the disciplinary committee again is a council committee consisting of a chairperson and 2 council members and 2 council members nominated by the government. 2 non-council members. They will be ex-employees or ex-officers of the government, etc. So this job of this DC is to inquire into the Schedule 2 offences, the second schedule offences, or both the schedules. Suppose if an offence is there are more than one charge and it is falling one in first schedule and one in second schedule clauses, then it comes before the Board of Disciplinary Committee. And the DC's powers are, after holding a member guilty and after giving him an opportunity, it can award the punishment in any of these 3 ways. One is reprimanding the member, and the other is removing the name of the member from the register permanently or for such period as it thinks fit. In the BOD, it has a limit of 3 months only, whereas in this, the name of the member can be removed for life, and impose such fine as it may extend up to 5 lakhs. So in the first schedule offences, it was maximum 1 lakh. Here it is up to 5 lakhs. And then there is one more appellate authority above these 2 authorities. That is appellate authority. This is again constituted by under our own act. And the chairperson will be a retired judge or a retired judge of a high court. This is a part-time authority. This will not be generally sitting on a daily basis, or nor they are the officers of the institute. There are 2 members from amongst those who have been members of the council for at least 1 full term and who is not a sitting member of the council. That is, the appellate authority eligibility of for the members is they should have completed at least 1 full term in the council as a member and who is not a sitting member. And 2 members to be nominated by the central government from amongst persons having knowledge and practical experience, etc. The orders of the Board of Discipline or the disciplinary committee can be appealed before this appellate authority, and there it is only the aggrieved person, that is the member who has been held guilty, only has the right to appeal before this appellate authority. For others, like the complainant, the remedy is to go by way of a writ or a special petition before the High Court, etc. This appellate authority will not entertain the appeals from the complainants, original complainants. So this is all these disciplinary authorities have civil court procedures, etc. powers in the case of summoning and enforcing, discovery and production, receiving evidence on affidavit. All these powers, civil court powers, are there with all these 3 authorities. So this is all about the disciplinary committees, Board of Discipline and our Schedule 1 and 2. I know I might have rushed to cover it within the time given to me. I mean, if there are any questions, there are some 3 questions in this.
Yes, sir. Yes, sir. There are 3 questions, sir. One from Soumya. Can CA holding COP pursue CS course?
Yes, no problem. Because as long as you have become a member, you can pursue any other course. And if the course is likely to be a full-time also, I have not come across any requirement where we need to take the permission. But as a matter of information to the institute, you may inform the institute that I am pursuing, particularly the CS course is not going to take your full-time. And moreover, when you are in a full-time practice, you can spend your time on the profession at a later part of the day also. And the second question is, can a CA holding COP pursue CS course?
Whether a COP needs to be surrendered while doing CS articleship?
No need to surrender the COP, because you can at best inform the institute that you are pursuing another course. And sir, if a member holds COP but is in paid employment of a CA firm, will he be treated as a member in practice or as a non-practicing member? No, he will be treated as a member in practice, but as a part-time member, because he is in employment of a full-time employment of a firm. Therefore, he cannot do any attest functions. That is why most of the big firms, whoever takes chartered accountants or employs the CAs as their employees, they don't allow them to hold COP. Firstly, even big 4 or big firms, domestic firms also. But if someone allows them to hold a COP, but they are there as an employee of the firm, if he is there as a consultant, then no need to treat him as a part-time employee, because first of all, he is not an employee, he is only a consultant. But if he is on the rolls of the firm, duly informing the institute about the employment, definitely he cannot function as a practicing CA.
But still, he continued to be a partner of that firm, right?
No, he is only a paid assistant.
By holding a COP, he cannot do audit and attest functions. So that is clear, sir.
No,
he can be a partner.
Just let me clarify once again.
The
message is, if he has joined as an employee of a CA firm holding COP, then first he becomes an employee of an organization. Whether it is a CA firm or a company is different. So therefore, while in employment, if you are holding COP, you cannot do attest function. So that's all. If there is anybody else who has any question or anything, I'll answer. Otherwise, we can close the session.
Any questions? Any other questions?
There are many case laws which I can quote, but definitely it's already, I think we have completed 2.5 hours, and listening ability of the members and adopting also may not be as efficient as it was at the beginning. Because all these case laws are available now on the website of the institute also, or in volume 3 also. So members may pursue. There are n number of cases on, particularly on the second schedule from clause 5 to 9, and from clauses 7 and 8 of 7, 8, 9 of first schedule. And the other misconduct. Also, there are quite a number of cases members may peruse, and ensure that we don't deviate from the established and prescribed code of ethics, because many of the complaints are coming from the today. Anybody, even a passerby, can file a complaint against our members, because we cannot say that I am a member and you can't punish me. You have no locus standi. Definitely, the disciplinary committee will look at the locus standi, but even it can be registered as an information case. And we have still to talk much more on the information cases and complaints and how the complaints are processed. Because once when a complaint is received at the disciplinary directorate level, then he will forward it to the respondent with seeking his written statement. And after his written statement, he will send it to the complainant for his rejoinder. And after receiving his rejoinder, he forms a prima facie opinion and places it before the Board of Discipline. And if the Board of Discipline agrees with that prima facie opinion, then it will further proceed. Suppose if they disagree with the Board of Discipline, Director of Discipline's opinion, then they have to deal it as per the directions of the BOD to further investigate or not. So this is a further another 2 hours subject is there if one wish to talk.
Yeah.
Stop it here.
Krishna Arjuna Rao, he has raised his hand. We will allow him to talk. Yeah, please, sir. Please unmute and speak. Krishna Arjuna Rao.
Hello.
Tell me, sir. Krishna, sir, tell me.
Nothing, sir. Thank you very much, sir.
We are on regional platform, so please speak in English.
Excellent, sir. You have given a lucid information to us. It's a long gap. Long gap is there to know all these things. We are just going through the journal only.
Right.
But you have given a lot of information to us. Thank you.
Today is the most important thing. See, please don't think that smaller members or MUFSL members will not get these notices. In fact, more and more complaints are coming against small and MUFSL members, because we tend to sign left and right certificates to the bankers and all these financial statements of non-corporate entities. And I am coming across at least weekly one reference from somebody or other seeking my help in addressing these matters. So we need to be very careful.
Very necessary, sir. It is important also nowadays, because junior members doesn't have any information on ethics. So they are simply giving the certificates without following the ethics.
Yeah, that is the problem.
Yeah, thank you.
Basically, every chartered accountant who is trained the article students must give the information from the day beginning onwards on the ethics, so that they may know the ethics.
The firms have to have their own SQC one, and they have to follow it up. And documentation is one major important area where in most of the disciplinary cases, the members are unable to support their work with the necessary documents. So that is the biggest problem. So members have to understand that the documentation is very important thing.
Okay, sir.
Thank you, Krishna.
Thank you, sir. Thank you.
Thank you, sir.
I think there are requests for closing the session. Let us close it, Rahman.
Yeah, sir. Sir, there is only one more hand raised from Krishna Arjuna, that Kalauji Shankar.
Good evening.
Yeah, good evening.
Tell me, sir. Shankar, sir, you unmute and speak.
Yes, sir. Good evening, sir. I just had one question. Can a managing partner become a director in any other company, or any other permission has to be taken in the ICAI?
No need to take permission so long as it is an independent director or simply.
Sir, did you get my question?
Yeah, I got your question. That whether a managing partner or any chartered accountant, even a proprietor, can become a director in any other company so long as he doesn't hold substantial interest, number one. Number two, he is not a managing director or etc. Number three, if he is only an independent director or a simply sitter director. in these situations, he can become a director without even informing the institute. But if
All
he is
right.
likely to take
Okay.
up the managing directorship, definitely he needs to inform the institute and take prior permission, and invariably he will be deemed as a practicing part-time member.
Oh, automatically. Okay.
Yeah.
All right, sir. So that was the one question. So just wanted to check. Anyway, thanks for your valuable input, sir.
Thank you. Thank you.
Very much enlightening session last 2.5 hours.
Yes.
Thank you, sir.
Thank you. And there is one question in the question box. I am a
Yes, yes.
trustee and honorary president in a trust. In my name, can I use prefix CA? Please clarify. So if you are using the cards of the trust, probably prefix CA can be used, but not the words full chartered accountant. If you are using the cards of the visiting cards of the trust with the trust name behind, below your name, you can use CA so and so, but not the full word chartered accountant, or use FCA or ACA at the end of your name. Sufficient. In your professional cards, you should not use trustee of so and so trust. Yeah, you can close.
Yeah. Thank you very much, Venkateswarlu sir, for your time and a nice presentation.
It's my.
Thank you.
I must thank all the members who have patiently heard the last 2.5 hours. Still, there are 80 participants.
Yes,
And
yes.
I'm thankful to SIRC for giving me an opportunity to share my little subject.
Actually,
whatever I know.
initially we have planned this program during May. It got shuffled, rescheduled to April. Then at last it find the light in May
No
month.
problem.
And I am specifically sitting here. I can see your name, J.
Yeah.
2004 to 5.
Yes.
Yeah, this is a wall of fame.
2004, 5. So that's why I said in the beginning itself, I am back to my memory lane, and I'm happy to be with the SIRC.
In order to tickle your good memories, I am sitting here, sir.
Thank you.
Thank you. Thank you very much, Venkateswarlu sir, for your time and presentation. Thank you one and all for your patience listening. With that, we have come to the conclusion of today's program. Until we meet on some other program, good night from all of us here. Good night, sir.
Thank
Good
you.
night.
Thank you. Thank you very much to the management and all of you.